Okay, hello. Good afternoon, everyone. So, welcome to another Philippine stock market wrap up. This is the last day of April 2020, last day of the first trimester of the year, and we're going to do a recap and going to show you what to watch out for, and I'm going to show you our stock pick. And later, I'm going to tell you the grasp of our year-end outlook. So let's start. So, same sequence as before. What happened this month, what to watch out for in May, stock picks, and as I've mentioned, we're gonna tell you our year-end outlook and our reason for the said outlook. Okay, so what happened last month? So we actually went up by 500, more than 500 points. We ended up at around 5.7 this afternoon, and despite that, of course, we're still down by 27% year to date, still down by more than 2,000 points. But of course, we recognize the rebound this month. So why? So of course, the market could have gone up or could have paired all its losses. But what dragged the market at least for some days? So here we go. So we saw actually very volatile oil market, especially in the US, specifically for the West Texas Intermediate crude oil price. It actually plunged into negative territory for the first time in history. So this is the first time that it happened. I'm gonna tell you a brief explanation why it happened. So of course, when it plunged to negative territory, the notion was this, that actually the producers ended up paying buyers for oil just to get it off their hands. That's the scenario. And the reason why it went negative was because the world has more crude that it can use. That's the that's the thinking. And of course, it's also about how much oil can be stored. So storage facilities and even ocean tankers are filling up. So that's the scenario. And to be specific, what went the price that went into negative territory was the May contract. So of course, there's also a June contract, a July contract, and that has different prices. Um, so we should take into account that scenario. But nevertheless, it went negative because of lack of demand and lack of storage facilities. So that is the reason why. And of course, we also heard forecast by the BSP that Philippine GDP will contract this year, I believe, to 2.02%. DOF also recognized that possibility. So next is what to okay. Okay. So I think what I should mention here is what supported the market, what's not in the slide. What supported the market is mainly because the slower cases of COVID and the slower additional daily cases of COVID, specifically in Europe, US. We also heard some treatment, some antiviral drug treatment by Gilead. Um, so of course, it has positive impact. It actually uh, made the treatment of the people with COVID cases quicker. So that was the recent finding, specifically just yesterday. So, and also to be specific, the market went up recently was because of the news on the industries that are going to open in the general committee quarantine. So I'm gonna tell you a bit of details later on regarding the general committee quarantine. So I'd like to show you the chart I showed, the the graph I showed last month. So this was the case as of end of March, right? You can see very steep. So this is where, yeah. So yan, dito pala yun, what supported the market. So there. So okay, again. So this is the cases now of COVID-19 cases. So of course, when you talk about the numbers, mas mataas siya compared to last month. But when you take a look at the line in terms of how steep it is, it's less steep. Of course, we want to see more progress, and we are seeing efforts from both the private and the public sector go hand in hand to really solve this problem. So in terms of the line, visually, just visually, I think this what we would like to see. But of course, we would like to see lower, of course, lower daily cases, more recoveries, less deaths. So this is, ito again, no, this is what we had last month. Very steep yung death, right? This is where it is now. Less steep, yung recoveries pa yung nagsisteepen. So this is what we want to see, more recoveries than deaths. So this is as of yesterday. I think there's already new data as we speak, but nevertheless, this is progress for us. Okay, so just some details regarding the general community quarantine. Of course, we're seeing this in the news, and I included this on my slide, mainly because I want for us to really focus on the sectors that will open. Why? We know that we are in the equities, we are in the stock market, and as always, the stock market is forward-looking. So what we would want to see, especially if the government announces GCQ, specifically in NCR, where most economic activity is, we want to see the sectors that will operate. Because if we know the sectors that will operate, it could actually translate to the stocks trading in the Philippine PSE, right? So for example, we'll see logistics. Full operation is allowed for logistics. We might see some logistic companies go up, right? We see tobacco products 50% to 100% opening, right? So those are the things we should watch out for. So again, no full operation is allowed. What I'm just gonna mention the noteworthy ones: so food manufacturing, energy, banks, telecom, and media. For the 50% to 100% side, we're seeing electric equipment, machinery equipment, motor vehicles. We're seeing housing and office services, right? Tobacco products, beverages, both alcoholic and non-alcoholic. So we have to take note of these sectors, especially when the government announces GCQ, especially in NCR. Okay, so next. So specifically in malls, in the GCQ environment, we're gonna see hardware stores open. So fun fact is hardware stores were actually closed in ECQ. Clothing and accessories, barbershops, salon, spas, and even restaurants for takeout and delivery. So next is we have activities that are still not allowed. So gyms, bars, libraries, religious gatherings, travel agency, so still not open. Trade shows, conferences, so we have to take note of those. So what do we watch out for in May? So possible reopening of some countries and some states in the US. So of course, I believe one country is already open. I believe it's New Zealand. And some states in the US. So this is where we can watch out for. Of course, if there's nothing happening in the Philippines, what happens usually stateside in the US, in Asia, that's what the Philippine tracks in terms of price movement. So if we see most states in US open by May, we can see some positive impact in terms of index movement here in the Philippines as well. So we should watch out. We should watch out for that. Possible transition. So like I mentioned in our previous slides, in the GCQ environment. So if there's an announcement, NCR, Calabarzon, Pangasinan, and other places became GCQ, so we might see some sectors be bullish. So of course, good to recall the sectors we mentioned earlier, what are gonna open compared to what is currently closed. So keep in mind yung ECQ sa NCR specifically until May 15. So of course, we are going to see announcement prior to that from the government. Next is progress on experimental antiviral drugs against COVID-19. What is driving the market for the past few days is the news on Gilead, if I'm not mistaken, that's a the pronunciation. That drug, of course, if there's further progress on that specific drug, we might see market go up as well. If we see other drugs come into play, more positive, right? So we should watch out for that. And then, of course, specifically, we should also watch out for main economic and corporate data. And we are specifically watching out for these. PMI manufacturing data specifically on Monday inflation on Tuesday, and of course, the first quarter GDP of the Philippines on May 7. So good to watch out for what happens in the first quarter GDP. Of course, compared to other countries, we are already affected, specifically in the first quarter. Besides coronavirus, we had the Taal eruption. So we should see the effect of that in the GDP number. Okay, so of course, other data we should watch out for: trade balance, OF remittances. Of course, we saw World Bank, I think, if I'm not mistaken, disclosed around 20% drop in remittances this year, while our government is seeing around 3%, around that level. So again, no, very important, because the market is already pricing in lower data. We should watch out for the forecast if it's above or lower. And you can see those kind of data in our reports in First MetroSec. So there. In the US, jobs reports, of course, we have two kinds of job reports. Fun fact, for US, first is the initial jobless claims. Those are the ones claiming that they're unemployed, both temporarily and permanent. And then we also see the monthly job report, which takes into account the actual job loss for the month. So there. So of course we also have durable good orders. What are durable goods? These are for the likes of automobiles, machineries, the ones you will use up for around 1 to 3 years, at least 1 to 3 years. So the big machines, those are called durable goods. The durable goods are used as a measurement to see the consumer spending. So there. And of course, most importantly, the corporate earnings here in the Philippines and the US. So good to take into account that the ECQ started around middle of March. So besides the first quarter of 2020, the most important, I believe we should watch out for is the earnings of the second quarter, but we'll get to that eventually. But first, let's watch out for the first quarter earnings. And then next is if there are possible emergency rate cuts from central banks. So there. So moving on to price action. Here is the PSEI right now. It's after its sharp rally, it's now consolidating, specifically between the 5.3 to 5.8 range. So it was a positive price reaction this week. But bottom line, since the PSEI is trading at a range, you treat it as one. This is for those who really want to find the bottom of the market. For those who really are short-term traders of the PSEI, if there are. So basically, the strategy is trade between 5.3 to 5.8 and lighten position if it falls below 5.3. So that is what the price action is telling us. So of course, in the last month we talked about gaps, right? So we'd like to show you examples now of some price pattern that is existing specifically in index names. So this is what we call the rising wedge. So the rising wedge is actually a bearish pattern, a bearish reversal pattern. And when I searched for the definition of this, it specifically said it is usually found in bear markets. So of course, again, we're talking about price action. For those who are really long term, it's another story. For those who really want to find the bottom of the market, who really want to trade the market, this is an important topic. So actually, we are seeing a rising wedge a breakdown of the rising wedge pattern in the PSEI. So this tells us that the PSEI might correct before actually continuing to rally. So we are actually seeing this in other index names: SM, GGS, SMPH as well, and Semirara. So this tells us that those stocks are likely to correct before it rallies. It rallies further. So these are the things we should watch out for if we are specific on price entries. So there. So we are moving on to stock picks. Same as last month, the current target prices for stock picks are still subject to changes. So before specifically going into the stock picks, I would like to mention the risk. So of course, our top sector pick is consumer. So we have risk for that. Of course, we're seeing possible inventory problems. We're seeing possible spoilage of the raw materials. We are, of course, other segments besides supermarket, drugstore, and convenience stores are still not operating, specifically the do-it-yourself, the DIY segment, specialty stores. So they are still not operating in the ECQ environment. So which are those? So here we have URC still, our stock pick. So of course, it released its earnings earlier this week, and we saw, as expected, an outperformance on the supermarket store segment and the convenience store segment, and actually the drugstore segment. So of course, what did not perform well was specifically the department stores, DIY. Of course, that is suspected given that they're not operating. But we're still positive on URC. Specifically, we see that the domestic BCF is branded consumer food segment. So these are the Jack and Jill, right? The Jack and Jill. So we see that to offset what the weakness in the international operation. So specifically in Thailand, Vietnam, there is weakness. There are weakness, but we see that to offset. And what is nice about URC is it's actually an essential. What they're selling is mostly essential. Mostly essential. They're selling noodles, biscuits, which are actually being given to barangays as relief goods. So target price for that is 166, but again, no, it's still subject to change. But nevertheless, it is our buy pick. Next is Robinson's Retail Holdings, which actually its earnings for first quarter grew by 45%, specifically because its Rustats business is now earning. So of course, for our clients who have been listening to us since last year, we have been telling them that to buy RHI, mainly because of the recovery of the Rustats business. And this is what we saw based from the first quarter earnings. So again, no, the segments that are currently operating, supermarket, drugstore, convenience, these account for 77% of RHI's revenues since in first quarter of 2020. So very, very important, especially if GCQ na. The hardware stores will also operate. So at least above 80% of revenues of RHI is already operating. So good to note. So again, another reason why we like RHI is the recovery in the Rustats business, which we are seeing as of the moment. Next is Pure Gold. Pure Gold is the outperformer amongst all index names for the past 2 months. So I would like to take note, ever since it hit its low of 26 pesos last March 19, it's now at 46 pesos. It's I believe 80% from the bottom. So Pure Gold is seen as really the safe haven play here in the index because almost, if not all, its Pure Gold and SNR outlets are operating, and it's actually seeing a boost in sales. So actually, the first week of the quarantine, it saw at least 50% increase in sales. So definitely a beneficiary of this environment is Pure Gold. And we still like them moving forward, mainly because of lower inflation and the capacity of the SNR to outperform against its competitors. So of course, for those who are not yet into Pure Gold and for those who are specific in price action, we released a trader's playbook earlier this week saying that we could buy Pure Gold on lower prices, given its rally is actually quite steep. But nevertheless, if you're both long-term, short-term, there's room to buy Pure Gold. So there. Okay. So again, we're also positive on banks, but of course, there's still risk, such as, of course, given the slower economic growth, we're seeing lower loan growth, lower fee income from credit cards, and higher provisions, non-performing loans, specifically for banks who are heavy on SMEs, because they are the ones who are likely to close down. They are the ones who are likely to default on their loans. So BDO is still the stock pick. Of course, we are seeing lower interest rate environment, but the robust expansion on its credit across segments will spearhead the growth. So besides BDO, our research partner in Singapore is also positive on Metrobank. So of course, Metrobank has the highest capital amongst other big banks, mainly because it just raised capital via SRO. Recall that, and it's given that it has high capital levels, it has more capacity to lend to others, so it can actually maximize margins um, given the pleasing banking environment now. Look, more RR cuts, lower interest rate environment. So there. Again, the same are also possible in property, but the risk that we are seeing now is we are seeing mall closures, right? Waiving of rental fees, lower residential sales booking, and delayed project launches. So these are the risks to property names. But of course, which are the ones who will outperform if you buy now? First is we RLC. So of course, its small segment is taking a hit, but we're still positive when it's office segment. We're also positive on Chengdu. Of course, Chengdu is its business in China. China is already um, working as we speak. Also, it's in the fun fact here is Chengdu business. It will actually recognize revenues in the second half of this year, so something to watch out for. And of course, now what is noteworthy here is our stock picks are tend to outperform post-COVID because our stock picks are those that are not that much exposed into regulatory. Of course, once the dust settles, once the COVID is now over with, regulatory risk is still in play. That's why the stock picks that we like are less regulated to um, less regulated. That's why these are the ones that tend to outperform, and especially once the market recovers. So one example is RLC. So there. Next is SM Prime. So of course, this is more of a valuation play. Of course, given the recent sell down, we believe it's already been priced in. The risks have all been priced in. And once the dust settles, we expect pent-up demand, especially from its domestic business. Of course, what we're also pricing in our valuation is the Pasay Reclamation project. So there. Next is Ayala Land. So amongst the property names, we see Ayala Land as a defensive play. Um, it has lower dependence on mall revenue. 70% of Ali's revenue is derived from residential and office for sale. So compared to other property names, Ayala Land is the least exposed to the ones that are being hit now, so specifically malls. And something to be excited about, of course, after this is its planned REIT. So there are news that they're still enthusiastic to push through with their plans to do the REIT. So it can actually free up capital and provide better financial flexibility for the company. So there. So of course, a holding company that we like is SM. So like I mentioned earlier, we like companies that has low exposure to highly regulated industries. So we could treat SM as one of the safe haven stocks. Of course, we know that its small segment is significantly hit, but nevertheless, once the dust settles, which which stock will tend to outperform are the less regulated ones and the stable ones. So SM is one of them. So there. So of course, I would like to add two other sectors. These are not our stock picks, but these are not our sector picks. But I would like to mention quickly there is two other sectors. So of course, for the power sector, we are seeing lower power demand, especially in industrial commercial sectors. Of course, what is benefiting now is the residential sector, given that most are working from home, most are actually at home. So to be specific, the industrial and commercial sector account for around 68% of the power demand. So that's a big hit. especially for distributors like Meralco. This is interesting in terms of the second quarter numbers, which we will see more of the effect of the COVID ECQ. So there, of course, power generation companies which sell to spot market are more vulnerable given the lower resin prices. So of course, lower resin prices because of lower demand, of course, also of electricity. So for consumer discretionary and also restaurants, we're seeing weak demand due to store closures. What's only driving them now are delivery services, like the pizza, like Shakey's and the like. And also part of consumer discretionary is SSI. SSI are the luxury brands, right? Zara, um, Bershka, and the like. So they're seeing big demand because their stores are actually closed because discretionary in nature yung business nila. So closed. For the construction and cement sectors, construction delays are the reason. That's why some companies are having delayed timeline. Cement companies are not seeing that much demand because there's construction delay. For the oil sector, we're seeing also lower oil demand, and falling oil prices is not at all good to them because it will actually lead to inventory losses, meaning the oil that they are holding as of the moment, yung worth ng oil na yun is actually lower na because of lower oil prices. So of course, gaming, it's given. Temporary closure of casinos, and for the likes of, for example, Bloomberry, part of their earnings comes from hotel, so they're seeing lower revenues from that because lower occupancy and the like. So that's the risk to other sectors. So this is our PSI year-end target. Noteworthy that we are more of the positive ones, but I will tell you why. So our current target now is 8,150 to 8,3. Previously, it was around 8,950 to 9,150. Of course, we are expecting lower EPS, lower earnings per share for this year at around negative 14.3%. We do expect earnings to grow nearly 26% by next year. So of course, there are plenty of reasons to accumulate, especially our stock picks. So I will mention this into a bit of a detail. So plenty of reasons to accumulate. So there's no healthy economy without a healthy population. So of course, before the economy recovers, we have to see the health issue addressed first. Of course, in terms of the capacity of the Philippines to recover, the country's key debt indicators remain at manageable levels. Of course, what is also noteworthy is we're seeing the BSP actually um, contribute to the possible recovery after they continue to cut policy rates. So lower interest rates, good because companies can lend at lower rates. Of course, they also pump liquidity after lowering the reserve requirement ratio. And of course, we are seeing economic and household and corporate conditions um, give us confidence in terms of after, of course, we are seeing companies give 14-month pay ahead, 13-month pay ahead. And of course, what is noteworthy for those, especially for those in the household who are not paying, for example, mga rent and the like, we are seeing higher savings rate. And of course, for corporates, I would just like to give some data, except for telcos and holding firms. Blue chip Philippine firms are actually have strong cash positions. So they have an average total debt to equity ratio of below 1 times. So they're better now compared to past crises. They're better prepared now to take this hit. So there. So number two, we're seeing attractive risk to reward compared to the global financial crisis before. So we did a stress test. We even gave a situation where we assume a 25 lower negative 25% in earnings, and after that test we still see that the market is cheaper compared to the global financial crisis before. So this tells us that the market may be a bit oversold already. Next is, of course, we see huge foreign outflows in March. And we do expect in the next few months to provide um, a bit of a rebound, a bit of inflow compared to previous months. Because the outflows that we saw, especially in the first quarter of the year, this tells us that foreigners are light in the Philippines. So once we see a recovery in the Philippines, those foreigners will quickly come back in the country. So of course, we know when the foreigners come into the country, they come in big and they come in quick. So for us who are trying to accumulate at current price, which are still low, this tells us that there's huge upside ahead. So there. So there, no, of course, we would like to promote Trader's Playbook. Um, this is one of our previous playbooks. So si Shakey's Pizza actually na-hit na niya yung profit take profit levels at 6.85 in just three trading days na hit na niya agad yung profit take. And this is what the Traders Playbook provide us, no, something to earn in this kind of environment. So what for those viewers who are not into First Metrosec yet, who doesn't have an account yet, Traders Playbook is framed into this. So first, what happened? Next is our view. We'll tell you what happened, and then we'll tell you what we think, and then we'll recommend. And then what's unique about our recommendation is we'll tell you when to enter, we'll tell you when to exit, and we'll tell you when to cut your losses, just in case the call is wrong. So very unique report. You don't see that much in other brokerage. And the next slide will tell you a fun fact about the stats of Traders Playbook year to date. So year to date, I will tell you that the hit ratio of Traders Playbook is, I believe, this is 7 out of 19. So if you take that number into account, parang baba, right? But if you take a look at the average year to date, for example, assuming you follow all of these calls, you would have actually earned from the market. Why? Mainly because the Traders Playbook, the behavior of the playbook, how it's framed, is we provide cut loss points that we are strict with cut loss points, and we provide a bit of a leeway into taking when to take profits. So that's why the Traders Playbook is actually, you can say, a bit of a recession proof, a bit of a bearish market proof report, because despite the PSEI being down by 27%, when you follow all of these reports, you would have gained. Of course, this is excluding commission taxes, right? But nevertheless, you would have earned from the market despite the bear market, given the how the Traders Playbook is framed. So of course, the Traders Playbook, around 3 to 5 times we publish that, no, in our website. So there, this is the end, and now we're welcome to answer your questions. So please ask lang. So first question, so I would like to answer first regarding, there are some questions here regarding San Miguel Corporation. I believe I have, first of all pala, before I answer questions, I have my colleague here, Iko, will also answer questions for you guys. So first, the question on San Miguel Corporation is, what is the impact of the COVID-19 on revenues, EBITDA on SMC, particularly Petron and SF, the food and beverage business, and also the energy business, the global power business? So of course, no, it's noteworthy. Let's mention each of them. So of course, like I mentioned earlier, First Petron. So First Petron, we're seeing lower oil demand. We're also seeing lower oil prices, meaning the inventory it's currently holding has lower value already. So that tells us the significant hit on earnings. Next is San Miguel Brewery. We're seeing lower demand from that, especially we saw liquor ban and lower tourism activity. Of course, we closed pa rin yung mga bar, pubs. So that's going to take a hit. So that's for the first question is San Miguel Corporation. Next is the status of the wholesale acquisition. This is actually related to SMC as well. And other big infra projects. Will any of the projects be postponed or shelved temporarily? If pushing through, how will this be refinanced? So, Iko, if I think you can answer this question. So,
Hello, sorry. Royce, can you repeat the questions? It's a bit choppy though.
yeah, sorry. This is the first question regarding the status of the wholesale acquisition, the airport, the other infra projects of SMC. So, were
Okay.
there any updates from that? So, yeah.
Okay. Actually, we just had a talk with SMC. I think the early or last week, I think. So they're saying they're still pushing through. For example, for the airport due to the ECQ, they won't be able to continue with the construction while within the ECQ areas. But upon the lifting of ECQ and implementation of GCQ and other area in Luzon, they'll be immediately continuing with the construction. In terms of wholesale acquisition, they said that well, they're positive on it, but there's the papers are still with the PCC for review, so they're still in constant communication with PCC because they have some demands and some I think issues in terms of the paperwork, but they're positive that they'll be pushing through with that. In terms of the airport for the Bulacan, I think they're still pushing through with that. However, they said that they don't have enough updates on it right now. There are no changes yet that was given by the management regarding any changes in the plans of the Bulacan Airport.
So again, okay. So next question is, what is the level of cash holdings for SMC? So I believe I got this. So currently not currently. This is as of end September 2019. They have not yet disclosed as of end 2019. So their cash as of end September 2019 is around 285 billion compared to 243 billion as of end December 2018. So there. Okay, so let me read the other questions. Okay, so
And also,
okay.
Royce, just to add on that
Yeah,
cash level, sorry,
sure.
hello, Royce. Yeah.
Yeah,
So
sure.
just to add on the cash level of SMC, so they just actually issued 3 billion in medium note. They have a 3 billion medium term note program. Also, they have already approved 60 billion of short term commercial papers for shelf registration. And then as food and beverage have issued 15 billion fixed rate bond, and global power has issued 600 million of senior perpetual securities. The management also note that they also have credit lines in place that are not yet used because they don't need it. According to them, they have enough liquidity for them to fund projects moving forward. And also they'll just rolling over the loans or the debt that has already matured.
Okay, thank you. Thanks, Chico. Okay, so next question is, when the expected small second quarter financials are out, do you expect a pullback, or are these priced in already in the current level? Of course, like I mentioned earlier, while we do expect the second quarter earnings to be a bit worse compared to the first quarter, it all depends on how bad is it. Of course, uh, our job as analysts is to forecast um, in terms of numbers how bad it is. So the market will go down if the actual numbers come worse compared to our forecast. Um that's one measurement of it. So again, no, as of the moment, it's really hard to predict what will happen. Of course, once we ask the management of what will happen in the second quarter, what's currently the status in the second quarter, that's where we can actually gauge better the scenario moving forward. So there. Okay. So next question is, what is the probability that the 5-3 level will be breached? So we showed you earlier a bit of a technical analysis, and To be honest, that's also hard to predict. But nevertheless, if you ask me, there's a chance, there is a chance that the 5-3 will be breached. And but of course, if you are a fundamentals guy, that's the opportunity for you to accumulate. Of course, given what I showed you earlier, the rising wedge pattern that's actually is telling us it's more likely to go downward in the near term compared to rallying. But like I said, the scenario I see is it will correct first before actually rallying further. Um, so that's my personal take on that. But nevertheless, good to for those who are buying individual stocks, good to follow your support resistance if you're specific into technical analysis. So next question is, what stock is related to pharmaceutical that is supposed to be good position in this COVID situation? Um, to be honest, no. The medical companies that will only benefit. That should, I believe that is rational to benefit from this. Is actually that can solve COVID, or eventually, pag may COVID vaccine na, those that can sell that vaccine. But as of the moment, wala pa, no? But wala pa. But what I'm seeing now, I'm seeing a couple of stocks, specifically si Euromed rallying, but no connection pa naman whatsoever. I'm also seeing si Certec as well. They mentioned in this news that they've actually been making this medical equipment, I believe. So I believe nag-rally siya at, at some point. And what we're seeing as of the moment naman yung virgin coconut oil. So I believe after that news was disclosed, si Axelum umakyat rin, right? But at the end of the day, si Tech lang yung medyo backed by news. But nevertheless, in terms of the sustainability, it's, wala masyadong direct pharma play in regards to COVID. So there. Okay, next question is, what can you say about MPI? So do you have a general take on MPI, Eco? Yeah, so I guess I'll answer that na lang. So for MPI, let's enumerate the the subs. So there's Meralco, there's also the toll business. What else? There's also the logistics business under MPI. So of course, first is Meralco. So again, no, like what I mentioned earlier, we're seeing
Hello,
lower.
hello.
Yeah. No, it's okay. Yeah.
Hello, Roy. Sorry.
Yeah.
Yeah, so it's just lagging. So for MPI, well, first, well, we don't officially cover MPI for now, but probably general comment on its subsidiaries. So one is on the tollway business. Well, we see due to the ECQ, we see less traffic in terms of the tollway. So probably on the short term, that will affect the business profitability. However, moving forward, well, we see, of course, after the lifting of the ECQ, those infrastructures will be integral for the movement of labor and goods in and out of Luzon. So I think on the long term wise, it will still be positive, but of course we will see hiccups in the short term given the ECQ. On Meralco, on the other hand, we see it's there are on power and industrial sector. Also on Meralco, we saw Meralco already uh, issue sorry invoking force majeure because as you can see, as a distribution company, they have contracts with energy supplier, energy generation companies in terms of the supply of energy. But with that contract, Meralco is in a sense taking the responsibility or the risk of lower demand just in case, of course, just in case the demand slows down. Meralco will be taking the hit because the take or pay contract with the generation company ensure that they'll be paying the generation companies despite the demand. So, however, right, there will be we see that there will be arbitration and given that it is Meralco who issued the force majeure, then the burden of proof will be from the Meralco side. So we're still on a wait and see right there. But yeah, that will pull down the sentiment on Meralco, and probably if that won't be invoked and the force majeure was not granted, then that will be a downside on the profitability of the business.
Thank you, Iko. Okay, so next is we have a couple of questions regarding consumer companies. First is what are your thoughts on FB? So again, like I mentioned in FB, under FB is the brewery business, which is actually it's cash cow, right? So given the liquor ban, given the lower tourism, the closure of the bars, the pubs, that will take a hit on FB. So we're not um, recommending our clients to fully accumulate FB as of the moment. Next is Jollibee. Of course, Jollibee. I noticed others are recommending Jollibee. For us, we've been really not so positive in Jollibee even prior to this crisis because of once the dust settles, the risk of there is, for example, the net loss from CBTL, Smash Burger are still there. The risks are still there. So that's why we are recommending companies which are actually benefiting as of the moment and which will benefit immediately once the dust settles. So that's why we're not recommending Jollibee. Next is some global questions. So the US and other countries abroad are seeing slowdown in economy, even worse than the Philippines. Should their economies worsen even if the COVID-19 is contained and addressed already, will this adversely affect the Philippine economy and by what degree? Of course, no, again, it is expected that the economy in the US will be bad, will be worse compared to the Philippines. Actually, the GDP of the US first quarter of this year, the first reading is negative 4.8%. For us, for the whole year, expected is only around less than 1%. It can drag us again if it's worse than expected. Again, no, the expectation, that's why the market is already trading at 5.7. The US is trading at the US is trading more than 10-20% compared to its highs. Is they're already taking all of this negativity into account. So what would make it go down further is if there are other possible black swans within after the once the COVID-19 settles. So for example, if data comes worse, for example, 4.8%, negative 4.8% is the first reading. Second reading, for example, comes in at negative 8%, that will drag the market down. But again, no, what the hardship given the pandemic is to gather data. That's why we have to wait and see yet what is happening on the data in the US. That's why I mentioned to you earlier the data to watch out for, because from that data to watch out for, we're going to see the glimpse of what may happen in the GDP already. So there. So again, we in terms of data, it's expected to come bad already. That's why stock prices are already this depressed. So that's the role of our research reports, is to tell you the expected and the actual. So if it comes worse than expected, the market will likely go down. So again, it's more of reaction mode in terms of data now. So there. But if it, of course, it will drag us as well if data here in the Philippines comes worse than expected. For example, the government is telling us contraction of 0.2%, 0.8%. For example, if contraction comes in at negative 2%, negative 3%, then it the market will actually go down. But for example, the market is negative 0.01%. That's actually better pa than expected. So the market can actually go up due to that. So okay, next question is what are your thoughts on the companies engaged in the construction industry like Megawide, EEI, etc.? So Iko, maybe you want to answer that.
Hello. Oh, yeah. So first, well, we don't cover EI for now, but we cover MY. So probably I can start with MY then. So for MY, actually, we see that of course, the MY started as a construction business, but they've already diversified business on other recurring income such as airports and PITX. So, however, due to the COVID-19 and due to the ECQ and travel bans, all of the businesses are actually affected. However, right now, of course, if we look at it, if we look at the sentiment, if we look at the news right now, M-Wide and EI, being construction companies, will be highly affected due to the stoppage of construction activities. But moving forward, we see that the construction books of M-Wide specifically is healthy right now. And upon the resumption of economic activities, we feel like the tourism should increase, specifically domestic tourism. So I think up until the end of the year, we will see domestic tourism to keep the tourism business afloat while we're waiting for the international tourism to ramp up post COVID. So right now, in the meantime, it's hard to really say a buy call on that. But as a value play, we see value in MY given a really low price level at this point, and we see that the intrinsic value of the company is so much higher than the current trading price. But yeah, right now, as Roy said, all our valuations, all our price levels and are anchored on strict assumptions on the impact of COVID-19 for this year and moving forward. So yeah, we have put in terms the price target we have with M-Wide already take into consideration the impact of COVID in the tourism business. However, we haven't fully account for the slowdown in the construction business. But despite that, I feel like it's even if we reduce it with the construction delays, moving forward, it's still a good value play.
All right. Thank you. Okay. So next question is, just in case of COVID second wave, do you see our market going lower than the previous or not? Okay. So I think good to watch out for if this happens. If this happens, good to watch out for Japan. I believe they're seeing that if I'm not mistaken, they're seeing that wave. I believe so. We should observe that. But nevertheless, I think if the second wave happens, the market may retest the 4,000 level, but I do not believe it could go lower. Mainly because the citizens now are more prepared on what to expect in terms of working from home, in terms of when to buy, what to do in case of this health crisis. So there, I think the market will go lower mainly because of the possible impact, the further impact to the economy. So there. Okay, so just to recap, I believe for those who missed our stock picks, so of course we have questions here kasi regarding what to recommend. So for consumer, we have URC, RHI, and Pure Gold. For banks, BDO, a research partner likes Metrobank as well. For property, we like Ayala Land, RLC, SMPH, and for holdings, we like SM Investment. So there. Okay, so next question is it good to invest in Dito Telco? I would like to answer that this way. Of course, for me, no, based on the traders playbook we released, I believe it was last week, it is good to trade Dito, mainly because of the pattern it made, the reversal bullish pattern it made um, last week. So yes, of course, you can take a look at the traders playbook and take a look at the chart it formed. That's why we were bullish on Dito. Is it good to invest in Dito Telco? Invest meaning bet on it for the next the next 1 to 3 years, right? But I think this is still in question, mainly because there may be possible rollouts given the ECQ. Of course, in the news they're saying they can do a technical launch by July and actually do its official launch by March next year. But of course, there are risks, and while the risks are there that they may not do so, it is risky to invest in Dito Telco. But for me, it is good to trade Dito Telco. So there, so you could go look at our previous book we made few weeks last week. So there. Okay, so last question. Yeah, okay. Last question. Is it good to invest in the telecom space? Oh, very interesting regarding telcos, mainly because they are actually, besides consumer staples, they are actually one of the sectors that neutral in this kind of environment. Of course, they're affected din sila in on the other segment of their business. But for example, si PLDT, they're seeing boost in their home broadband business, mainly because halos lahat naka-work from home. But of course, tama rin siya dun sa mobile subscriber business niya. Lower subscriber. On the other hand, si Globe benefits from mobile data sa mobile data business niya. So I think it's good. I think compared to consensus, I think for example, Globe and PLDT are already trading near their consensus average target price. So for us, no, it's in terms of they're neutral now. They're neutral now, but in terms of upside, baka limited na lang. So that's why our stock picks are consumer property banks. Kasi while they may be negatively affected by the crisis, once the dust settles, sila yung may biggest upside. So there. So thank you very much. And I hope to see you next month by end May to recap what happened in May 2020. So thank you everyone. Have a great long weekend and may the force be with you all. So thank you.